Just a quick update on one of my trading sardines that I like to trade in and out of. Outdoor holding company, POWW, which is the ticker for GunBroker. And I've done other videos in the past, and you can check it out on this company. But last time I sold out at 190, and it did get up to 206 in the past 6 months after that. And now it's come down again, and it looks pretty interesting for a short-term trade. So this is not going to be a long-term compounder because there's a limited total addressable market for buying guns online. But this is the best in breed for that, obviously. So just to recap, they run gunbroker.com, and they used to have a money-losing ammunition business that they sold off to Olin, and now they have no debt and a ton of cash. And recently they announced on yesterday, in fact, that they were going to start a share repurchase program, which should boost the stock price. So I think the current CEO has a bunch of stock options, and I believe stock has to be over $1.82, I want to say, for them to be profitable for him. So he's got an incentive to make the stock go up. And it's a $15 million buyback, which on a $200 million market cap, it's about 8%. Actually, 7% at these prices. And there's an interesting trade that I've used to own, and I've sold recently at, I think it's $24.50. And now it's 23 again. And this is POWWP, which is the preferred. And the preferred stock at this price is paying over 9% dividend. And it's callable at par at $25. So at some point, the company can say, give me your shares back and we'll give you $25. And you have to give it to them. You don't have a choice. So at $23.96, the difference between that and 25 is about 4.5%. And they are callable in May 18th, 2026. So in 5 months, right? So in less than half a year, you would get that 4.5% plus this 9% annual dividend divided by 4, right? So that's 4.5% if it was in June, but it's not going to be in June. If they call it in May, you would only get one of those, right? So 4.5 plus 2.5, it's about 7. And it's pretty likely that it will get called because if they're buying back shares, it's because they have too much money and they think the stock is cheap. And if they have so much money that they don't know what to do with it, why are they paying 9% dividend on this when they can just call them in and do other things with the money? So this would be a great trade if they were callable after June, because then you would get 2 of those interest payments. But because they're callable in May, you're probably going to get 1 before they call these. But 1 dividend plus that 4.5% to close the distance between $24 and $25. It's not a bad trade. I think there are better ideas out there, and I do have a little margin. But if I didn't have margin and I was just had cash sitting on the sidelines, this is an idea I would consider. But again, this isn't a recommendation to buy or sell. These are just me looking at things and walking through my process. It's not investment advice, but let me know in the comments what you think about this.